Hello traders, welcome to our channel once again. This is Elliotwave trading platform. All right, so in this video, guys, I have something interesting for you guys. Imagine in a world of financial markets where over 90% of traders lose their 90% of their capital in 90 days. My name is Sam Nebo, and in this video, I'm going to teach you a ultimate wave trading strategy, that is proven, tested, and is ready to make you consistent profits in every market condition. All right, so if you've not subscribed to this channel, guys, please kindly subscribe, because what you are going to learn today, if applied correctly, will consistently pay you from the market. All right, so now what you are going to learn today is, number one, is why wave theory or Elliott wave, why I decided to choose this after many years of trial and error. And secondly, the simple concept that every trader should focus on. You see, most people are overemphasizing or overanalyzing the market, and that's why they say that overanalysis will ultimately lead to paralysis of the market. Now, and thirdly, you learn how to use the trend line, in a simple, ABC, how to identify and use a trend. And thirdly, you identify a simple corrective pattern. In this video today, we are going to stick to simple corrective structures, because if you can identify the simple one, and you consistently make money from there before you can advance to the complex corrective structure. And also, finally, I'm going to show you some trades I've taken using this concept before and after in the market. So I believe you're excited as I am, and kindly subscribe to this channel as we dive into the market proper. Now, why Elliott wave? Why am I talking about Elliott wave, among others trading patterns or instruments in the market? You see, market always, as we have established over time, moves in waves. Okay, so if this is market, will always moves in waves, like it is like a sine wave, and as you have seen over time, and most times these are measured in price, and also they are measured against time. Okay, so you can bear me witness that most traders, they are interested to see the market advance in price and not minding what happens to the time. Now, Elliott or wave theory have identified that for every market will always advances with an impulse and correct himself with correction, and also advances an impulse and correct himself with correction. So this captures the emotions of the market. It captures the sentiments of the market, and also tells you the participant of the market, telling you that okay, when the bulls are taking over and where the bears are taking over. So ability for you to understand what happens in this region, guys, will ultimately position you in the right wave of the market. So as you can see that, having identified this, we can see that to represent every market. You can see this happening in every market. So wave theory will help you to trade systematically and help you to avoid trading on impulse and trading with emotions, because you can make a decision. You can decide the wave you are trading and make your market, because wave theories or wave traders are market makers. All right, so you make your market, you know when to take action, and you wait for that moment to set in, and then you strike. And that's how it is, guys. All right, so now, having established that, I'll try as much as possible not to go outside of this curriculum, and we stick to it. And within a short while, you'll be able to see, clearly how you can identify this, even if you are just starting to trade today. Now, let's dive into the concept, the real thing every trader should pay attention to. Now, having established this, guys, the market moves in wave, in correction, in wave, as you can see, and all that. So now the first thing you need to ask yourself is this: Every market will always start with an impulse. All right, so have it in the back of your mind. And what are the characteristics of an impulse? As you can see here, impulse are always sharp, they are moving in the direction of the trend and all that. And also, after the market have established an impulse, the market will make what? We make a correction. And after this correction, the market will do what? We continue with that impulse. All right. So we have what? Impulse, correction, impulse. So this is a summation of a wave theory. And if you take 5 waves of Elliott wave, you also see this happening over and over in the market. So I want you to take note of this, capture this in your mind, have it written somewhere, and because almost all we are going to talk about today will be based on this concept that a market will make an impulse, and after which it corrects itself and another impulse follows. So this is a summation, a conclusion of the whole matter, that what you'll be looking out for, before you take any trade in the market is what? An impulse. And if you can identify an impulse, you look for what? The correction. And if you know how to identify correction, which we're going to talk about today, then after which you position yourself for the what? For the next impulse. Since we've stated before that the market moves what? Advances in price over time. So now we know that if you can identify what happened here when the market spread, because over 80% of the time the market moves in time, and over just 20% of the time, the market advances in price. So you can see clearly that after you can identify what happens in time, you can catch the price. All right. So now, having established this, what are the patterns that we look out for? What are the patterns that we look out for? Now, first of all, we have what we call a regular flat. I'm going to simplify this. We're just going to talk about the simple patterns today. So, the market makes an impulse. You look for a regular flat. How does it form? It forms with what? An impulse, a correction, and form what? Another impulse. Okay, so the second one, the market makes what? An impulse. It's trending up, and it gives you what? An impulse. We have another one we called this particular one now is a running flat. We have this an impulse market mix. This is called a contracting flat. A contracting flat because it does not break up, it does not break down. Then we have the final one, the market makes an impulse. Market makes an impulse, it corrects itself. So in all this is what they call the expanding flat, guys. Expanding flat, after which the market goes up, after which the market continues in trend, after which the market continues. So you can see now. So this is what they call A, B, C. Let me use this perfect, let me use this Elliott waves label ABC here. You can see this is what they call A, B, C. Okay, this is what they call ABC, and that is how you recognize them. And also, this is what they call A, B, C. Okay, so you see how it's been labeled, you see how it's been identified. So our job in the market is to know this. When it completes, then you start taking action based on that. Now there are few levels, but the most important thing we pay attention to here is the structure. Because most times you know that when you're using a Fibonacci most times can give you a zone like 50% to 0.618. Either it ends in 50%, but most important thing for it to be a regular flat, the C structure, the C wave must first of all break this big uh, ending of A structure. So once this is broken, sometimes you can see it will just tag it, break it slightly, and then reverse it. So once it's broken, you know that this is a regular structure, and if this first impulse is strong, definitely you should expect this second impulse, which will take place. And this one also, the characteristics is this, that the C will not break A. Okay, the C will not break the end of A. So it remains in this form. And how do you trade this? Most times, once you identify that this impulse is strong and this one is set, then at the break of a trend here, you draw another trend here. At the break of another trend here, then you can position yourself for this wave. Okay, because most times you might think that this is reversing, and it comes to break here, giving us an expanding flat like this. So, and because of that, if you want to be conservative in this running flat, you can position yourself at this point, guys, at the break of the B structure, so that in case this is forming an expanding flat, you will be in a safe place. Now, the third one, which is the contracting flat. Now, most times, this is the most dicey one, because sometimes you might think it's about to move and it's not going anywhere. And this can actually form a triangle here, guys. It can form a triangle here, and at the end, it moves. But most times, especially with that trade the crypto pairs, most times when a pattern forms, is contracting flat, it's always explosive when it's breaking. It's always explosive when it's breaking, guys. So that's why we always try as much as possible to follow this as it forms, okay? To follow this as it forms, because it's always explosive as it's breaking up here, guys. So this is still the same thing, A, B, C. Where this this one should be here. This one should be here. 0 is started with this. This is A, this is B, and this is C. Okay, so that's how we roll. Then the last one here is also here. We measure it like this. Don't mind my drawing, guys. I just want you to get the concept, before you dive into the real market. Okay, so this is how it's being labeled, guys. Okay, so you label it this way, and as it's completed, you start taking action. So now this is some of the simple corrective structures that I want you to master. Now, in case it's still confusing you, don't. But as you go to the real market now, a live market, I will show you how we identify these patterns, and because most times that is how you'll be seeing them. So you start noticing how it's being done. And the good part is that once you start seeing them, you keep on seeing them. All right. Once you start identifying these patterns, know how you won't see them again. You will keep seeing them, as anytime you open the market. All right. So that is just it. Now, the next thing we need to do now is to just go into the real market as we start seeing these patterns that we have identified. All right, so this is a Bitcoin chart. Now we can choose any time frame, guys. We can choose any time frame to work on this and to see how we'll be able to identify this. So let me just use 1 hour on the Bitcoin pairs. So now the next thing that we need to talk about is the trend. The trend. They say that using trend is your friend, okay? And because we have a trend in every market, and that's why we have a trend line. Now, the mistakes most people make, for instance, is that how you draw your trend line matters, and from where you're drawing it from matters. For instance, since a market is trending, you should know from the base where the market is trending from. Before you draw your trend line, you should first of all identify the starting point of that trend. the starting point of that trend. We believe in five-way move up, five-way moves down, or three-way move up, three-way move down, because the maximum a wave can trend from Elliott wave is five wave. Okay, so what we'll be looking at for is five-way move up, or three-way move up, or three-way move down, or three-way move down. For instance, if you take a look on here now, you can see clearly 1, 2, 3, 4, 5. Okay, so that does it mean these ones are not part of here? Yes. Now the answer is simple. This wave here, from here to here, for instance, they are in one wave. Why these ones are in bigger wave? So one of the reason why we use trend line in our trading is to help us identify what a wave is, because in every market there are small waves, there are bigger waves. So for instance, somebody can be you can see a trend in 1 hour, and if you go to 30 minutes, that trend is not there. If you go to 4 hours, that trend is not there. For you to say that we are trending, you need to first of all ask yourself, which time are we trending? If you take a look on Bitcoin, for instance, if I should take a look on this Bitcoin, and I go to, sorry, take a look here, we go to, this is monthly chart. If you go to monthly chart on Bitcoin, no, you can see that Bitcoin has actually broken this trend. Okay, it has broken this trend. So now Bitcoin is not trending here. Okay, Bitcoin is not trending on the monthly chart. Okay, it's correcting himself on the monthly chart. But if you come to the daily chart on Bitcoin, you can see clearly what we are getting here. You can see that Bitcoin here is what is trending, because we have seen what impulse correction, impulse correction, impulse, and it hasn't broken this structure. So we hasn't made a lower low, a lower high. So Bitcoin is trending on the daily chart. So having established this in your mind, if you are a scalper, you have no business looking at the daily, you have no business looking at it, even though you might use it to have the overall mapping of where the market is going, but your decision in the market should be based on the time frame you are trading. If you take a trade on 1 hour, then you should monitor that trade in the same time frame, so that you know when that trend elapses and when that trend will start moving. All right, so now, as I said, that we use trend line to establish, the patterns or the mono waves in the market. So having established that, let's now look at for trend in 1 hour, because this is Bitcoin. Let's look at trend in 1 hour. So looking at here, guys, from where are we coming from? Now, irrespective of the craziness of the market, you can still, so where is your recent high? Your recent high from the market is where? This is it here. You have it, you just map it here. This is your recent high of the market. Where is your recent low of the market? This is your recent low of the market. Okay, so what is happening here? The market is simply consolidating, because it's not breaking high, it's not breaking low. So for you to trade this kind of market, you must be professional. You must understand how to trade the corrective patterns. If not, the market, you make money today, you lose money tomorrow, because the market is not trending, okay, as this time frame implies, because they are just moving sideways. They are moving sideways. So having have that in mind, if you scale down to 30 minutes here now, the same Bitcoin, what are we seeing exactly? We can see here now, we have the same concept. You use it here. We have this low here. We also have the same recent high here, and you can see the market also is what? In between. Okay, so but there's another trend here. There's another trend you can figure out. There's another trend. This is the best thing for you to do. The first thing you need to do is to draw in your trend line, because without you drawing your trend line, you might be jumping in when you should not be. Okay, so first of all, you draw your trend line. You can see this one is a trend, because you can see clearly that this is a three-wave move. This is an impulse, this is a correction, this is an impulse. Now, from what we just learned, what do you see here, guys? What do you see here? This is what? This is a running flat. A running flat in between this regular flat, because this impulse correction impulse. Okay, so now you start seeing them: impulse correction, impulse correction, impulse. This is a 5 wave, this is a 3 wave, this is a 3 wave. So now the market is actually coming down. So what are we expecting now? In case if you are trading in 30 minutes and this is what you are getting, now the first thought process should be: number one, the market has actually broken this trend. Now, I said, when a trend is broken, what does it tell you? It tells you that the rest of the move is now one wave, kind of. It's a one wave. So meaning that from here to here is what? One wave. So we have one wave here. So this is A, this is B. So now, since he has not broken this, so what should we be expecting? Okay, now at the break of the, which actually Bitcoin has broken, so probably we should be expecting this market to at least break this low. Okay, we should be expecting Bitcoin now to break this low, because we have had what? An impulse. This is my first impulse. Impulse are sharp and sharp move in the direction of the trend. And now we have a correction, which is 3 wave move down. I also have a bigger correction here. And now you not break this. And for the first pattern, I told you guys that this is might be a regular flat. You can see that this trend has been broken, and you can see a confirmation here. So probably this will be what you should be expecting, guys. Okay, so in case you are trading Bitcoin, at least at this time, you can risk some of your capital here now and see what the market will give you. And remember, the one we are not talking about here is the risk management. We don't just jump into the market. We risk a certain percentage, because we know that this is a probability game, and whatever the market will give you today, it might take it from you tomorrow. So because of that, we take calculated risk. We take calculated risk. So this is a potential regular flat information. It's a potential regular flat information, because we're expecting this is to be A, B, C. So we'll be trading C as a form. So now you can see clearly how it's been identified. Now let's go back in the time. Let's go back using 1 hour in the time. You can see a lot of this move, guys. A lot of this move. Now, the first way, the best way to identify this is to first of all identify your what? Your impulse wave. As I said, an impulse wave is always sharp and in the direction of the trend. Now, you can see here now we have what? 1, 2, 3, 4, 5. This is an impulse wave. So we have this A, B, C. What does this thing signify? This is a contracting flat. Remember what I said? Most times when you have a contracting flat, at the break of it, it's always a massive explosion. You can see what happened. The market gives us a very big run. Okay, so also look at this one through here. This one also gives us a B wave here. What does it give you here? This gives us a running flat. Okay, and at the break of it here, the market gives us this wave. So you can go on and on and on to show you guys, for every market. It's not only in crypto, it happens in every market. It happens in every market. You look at this plunge here, very massive sell. Now we have this market here. This one breaks this this market breaks this trend. So it breaks this trend. It gives us this. This one is called a running flat, and after which the markets, had a massive sell-off. So the same thing applies to every market. Time might fail me to show you examples of every market move here. For every market move, market don't just move in a straight line. There is a wave that triggers it. Now look at this one here. Look at this market move here. We had this one. We had this a we had this impulse. We had this correction. We had this impulse. We have this correction. We have this impulse. Okay, and it moves up. So for every move, always identify a corrective structure after that move. And if you can't do that, I promise you, you will get the next move. Now, before we sum up this, let me summarize. Before I show you some of the live trade I took, okay, let me sum up the trading strategy that we just talked about. The first you need to identify the trend break, first impulse, pattern, then trend break, entry, target. Okay, so now first trend break, first impulse, pattern, entry, uh, entry and target. Now, if I should illustrate it, pictorially, you can see now the market is coming down. Assuming this market is coming down here, market is coming down. This market is coming down, and have this what? Now there is a trend break here. Sorry, there is a trend break here, guys. Okay, so that's a trend break. Then this is the first impulse. Then you identify what? A pattern. Regular flat, impulsive, expanding flat, running flat. Then you also want to wait for this to complete. You see, for people that use what's it called, candlestick pattern. So you should watch out for candlestick pattern at this point, guys. Okay, or you wait for the trend to break. It just depends on which one works for you. Wait for the trend to break, and after which you take your entry and you take this trend. Now you are taking this trend with confidence because you have this first trend. Okay, now the truth of the matter is this: how strong this fourth trend is will also determine what happens here, because it might be the end of this move. Okay, if without this trend occurring, this move might not be over. So after this trend, the market might still be coming down. Okay, that will be what? An impulse, a correction, and impulse. So what we are trading is the second trend that correspond, that qualify or complete the first trend. We are trading the second trend that complete the first trend. And bear it in mind, this might also be the beginning of a new wave and it continue moving up. So it depends on where you are in the bigger picture of the market. Okay, the bigger picture of the market. Now, to some, this might be confusing, while to others, it might get the concept. But don't worry, just try as much as possible to watch this video over and over again. You will learn to get the concept. Now, remember, if you are getting values from this video, guys, you kindly subscribe and share this with your friends, because what we do here is something that we have perfected over years and now is working for us. Now, if you want to learn this, if you want to master this, you want to learn how to trade with confidence, how to trade any market, irrespective of the movement, irrespective of the momentum, with confidence, positioning yourself as a market maker, don't hesitate to get across to me. I'll be glad to help you in this journey so you are consistent profit from the market. Now, let me show you some of the live trade I took, before and after. Now take a look of this market. What was my thought process here, guys? I was thinking because we have had this first impulse here. So I was looking at here, I said, okay, this is an correction, this is an impulse, a correction, an impulse. This is a regular flat. So because I've seen this impulse, correction, impulse, and this is the second one, so definitely I should be expecting this before this wave is completed. Okay, that was my thought process. And what happened? The next wave? Let me so you can see it actually plays out, the way we expected. So it plays out here, and we made this clean money. Now, the next one here, what was my thought process? Let me show you. So here I was thinking, okay, this is my first impulse correction. So now from here, I was expecting the market to move, but before I came in, all this has played out. So it's a bit complex correction, but this is A, this is another one, and this is another one. So this is what they called complex correction. But in a nutshell, if you go to a bigger time frame, it's also like impulse correction impulse. So what am I expecting? I was expecting this market to be aggressive because it has given me a triple three kind of 3-3-3-3 kind of corrective structure. So I was expecting this move breakout to be very aggressive. And what actually happened here later on, let me show you. That was a massive breakout. So we banked heavily on this because the market completed the structure. Now, the next one here, we are also expecting a breakout because we have seen that the market has given us impulse correction, impulse, that is A, B, C, and actually spend there. And at the end, he has broken this trend. So now my thought process is, even though I didn't catch the market when it was breaking here, now the market has actually given me a new set of reasoning because it has given me here a correction, an impulse, a correction. So see here now, I'm looking at what? I'm looking at a running flat, and I'm expecting this wave, guys, to break this place because the markets are, first of all, giving us a bigger three-wave structure, And what happened next? Boom, the market actually did what we were expecting. Okay, the market actually did what we were expecting. So let's go check the last one, the last here. So our thought process here is the same thing, guys, the same thing, the same concept, irrespective whether the market is up or down, the same concept. We have the market breaking this trend line, and we have seen this impulse. We have seen this correction. It was three-wave here, but it's tiny. If you go to 30 minutes, it's clearly, I think I checked that in 30 minutes, and I've seen also this has broken, and that's why I took this trade, because it's confident that it's going to retrace at least 50% of this big move. Remember what I said? Anytime the trend is broken, it can mean that this whole move is over. So with that in mind, we had this massive drop. Okay, it was exactly as we forecasted it. Okay, so that is just a little of what I can show you guys today of what we are using the market, this wave analysis to do. Even yesterday, I think I took this trade impulse here, and this is a corrective structure, and at the end of this corrective structure, it has given us a clear three-wave here. So I entered the trade here, expecting this to play out, which actually did as we expected, and it gave us this 40%. All right, so the same concept applies in Forex, in every pairs you're trading, and I also trade for Forex too, but now I'm just trading a lot of. So let's take a look on this one, which I'm currently in now. And this is a SUST USDT. So my thought process here too is we have this impulse here, guys. This is an impulse. So we have had this massive corrective structure. This is what they call an expanding flat. And anytime you see an expanding flat here at the beginning of a new trend, always a big massive explosion. So what we're expecting is the market to continue pushing high. I think I'm currently in this trade. So if I should, let me see. Okay, good. You can see now I'm still up 45%. The market is currently active. Okay, So this is how we roll, guys. This is what we do. So we trade with confidence because we understand the structure. So you can see it's for 7%. Is a live market, is still on. So if you like this kind of content and if you want to like learn how to trade for yourself, now kindly subscribe to this channel and also contact me using the detail below. I'll be glad to help you guys, and together we can make this crazy money from the market. Thank you for your time, and don't forget to subscribe. Have a nice day.